right. Hey, restorers, welcome to a very fresh episode of the Main Street Restorer. We are talking about Q3 and kind of some of what's happening in Q4 in the restoration industry as far as mergers and acquisitions. And it's been a very interesting kind of shift at the end of the year. It's been a slow year, and then now more recently, there's been a little bit more movement, and you can see some new players coming into the space. I feel like I'm hearing new names every week and new companies. Have you heard about this? Have you heard about this? So it's becoming a very interesting space. Again, things not as quiet as they have been, even though the industry is down. A little background on claim side, the latest data from Veris that I just got a couple days ago is showing that we've had the lowest claim volume in 3 years, 28.5% below Q3 of 2024 is where we were at for Q3 as far as volume, but one of the highest levels of severity in claims, which is kind of interesting. That's just showing, I think, that people aren't filing the small claims. It's all big claims now because homeowners don't want to deal with the small claims and have their insurance go up, which is a totally different discussion. But overall, the industry is down. It's been a very interesting, like 18 to 24 months for the industry. And the way that M&A is happening is shifting. This is something that Gokul has been talking about for a while when we do these kind of market updates. And now we are truly seeing some of these shifts happen. So that's what Gokul is here to talk about. Gokul, really quick, go ahead and introduce yourself for people who are new here.
Yeah, so thanks for having me, Michelle. Yeah, so I founded Restoration Brokers America. We do M&A in the restoration space. It's hard, it's interesting. We're almost going on 20 years of doing this in restoration. So we've been doing this long before it got sexy and people started talking M&A. So, I don't want to say we know it all, but I can say we know enough to be dangerous.
Definitely know enough to be dangerous. Yes. And I'm curious, just from your background, have you seen, I know that there's never, I don't think, been an M&A period like this before, but I know that there have been other cycles like this where claims volume has been down for a stretch and then it goes back up, right? Like what's been your experience there?
Yeah, so I don't panic, I mean, I've been through so many shutdowns and so many elections in my career and,
Yeah.
so many the world's going to end scenarios.
Yeah.
And as boring as it is, I just say that if you got a good business, you just keep plugging along with a lot of discipline and you're going to be just fine. You
Yeah.
know, yeah, claim volumes are down 28%. I get it, but they're not going to be down forever.
No.
You
Yeah.
know what I mean? So
Yeah.
you just wait a little bit, it comes right back up. I think that the key is to keep doing what you've been doing. I think a lot of people feel they need to change their strategy and to change their business strategy. And I think that's the mistake where they get reactionary around it. I think you just got to continue to do what you're doing.
Yeah. Continue honing in on what you're good at. And when it
Right.
comes back, it'll come back tenfold because you've honed in on what you're good at.
Yep. Yep. Everyone's trying to change and it takes them off their game and they get very reactionary and you can run a business scared, so
Yeah.
you gotta just kind of continue to do what you could just continue to block and tackle, do the things that you know how to do well, control what you can control. And before you know it, volumes are up, sales are up, and there you go.
And there you go. Okay, so we're talking about things that make people kind of scared. The government was shut down for, I think, at least 6 weeks. I'm not sure how long it ended up being at the end of it, but talk about the impact that that had kind of on the market before it opened back up, and even now.
Yeah. So on the Main Street side, so on the businesses that are worth 5 million and under, a lot of people use government loans and things of that
Mm,
sort. So usually we're used to, a week or a 2 week shutdown. It really doesn't affect our, people buying and selling companies. But this time it did because I think what we had a 6 week shutdown, I think, right?
yeah,
Something
I
like
think
that.
so.
So yeah, I mean, it affected loans. It affected loans going through to the bank. It affected consumer confidence. People got a little shaky. 6 weeks was a long time for things to just kind of hold on. So yeah, it really did affect it. And I think, as far as when we surveyed our buyers and when we were talking to a lot of our buyers, they were a little bit more hesitant this year, with the government shutdown for sure.
Yeah. Yep, absolutely. So what else are you kind of seeing in the market? We got through the government shutdown and money there is moving again, but what is the overall market looking like for M&A right now?
Yeah, so let's talk about that, right? So let's talk about the buy side of it, which I think would be a really interesting theme. I think this theme is going to continue into 2026, I think. I think when you look at the smaller businesses, let's call it the Main Street business, 5 million
Mhm.
and under in valuation or enterprise value. It's really interesting. We got almost 40, 45% of our buyers now coming from corporate America.
That's a
Huge,
lot.
huge shift, okay, in buyers. And our buy side volume is up
Hmm.
tremendously, okay? Uh, because I think what's happening is a reflection that, as unemployment ticks up and as people get scared of AI or all these major trends going on in the corporate world, there's a lot of C-suite executives and people that are like, you know what, I want to go control what I want to control. I don't want to go back into the job. So they're coming out and they're looking for companies. Okay, so it's a seismic shift for us, and it
Yeah.
shows. I mean, an average business, took 7 months to sell on a normal environment. Now we're selling them in five, which is, so it's a huge shift that's happening across the country for us. So that's on what I call the Main Street business, 5 million and under, right? So let's talk another buy trend that's happening. Very, very, I think it's good for the sellers. It's good for our industry, I think, is when you look at the lower middle market, let's call it 10 million and above in valuation companies or the private equity deals. Some of the traditional buyers have slowed down their
Mhm.
acquisition in our industry, as everyone knows, right? For different reasons. Maybe they've acquired enough, or maybe they're
Yeah.
working on integration now for a little bit, before they go back on the trend. So everybody's got their own strategy. But, you know, overall, the traditional buyers that were in 2021, 22, 23, those buyers are slowed down. But, but, what we're seeing over the last year, and that trend is really accelerating, and we think it will accelerate into 2026, and I think it'll be fantastic for the industry, is we're getting some really interesting, experienced, highly
Hmm.
skilled private equity groups coming into the marketplace. All right.
Yes.
So there's a flood of new private equity groups that have built platforms in other home service verticals, roofing, flooring,
Hmm.
windows, HVAC, the mechanicals. They've built mega platforms and they're coming in and they're bringing in a whole new level of professionalism into our industry. And I think it's going to be fantastic for sellers going into 2026. I've been doing this almost 20 years and I can tell you, you know, even what we consider a heyday in 21, 22, maybe even 23 in our acquisition side, I'm seeing that sellers are having more options today than ever before.
That's
A
amazing.
huge shift happening in our industry. Yeah, on
So
that.
talk about if there's more options of people to sell to, what are we looking at as far as prices go and multiples? Where are those at?
Yeah. So, like you said, claim volumes have been down.
Yep.
So profits have been a little bit depressed. Okay, they've
Yep.
been depressed about 5, 6%
Yep.
across the country. Okay, so prices have gone down a little bit. What people are paying for these companies.
Yep.
Okay, so if you're off 10%, maybe your selling price will be off about 5%, so to speak. So they're gone down, but the multiples have stayed the same, and in some instances they've increased.
Hmm.
You see where I'm coming at? So what
Yeah.
people are paying for every dollar of profit that you show on the books are staying pretty steady, and in some cases they've increased. We just did a deal in the Northeast, uh, probably one of the higher multiples that we've seen in 5 years, maybe. And so if you're well prepared, and these private equity guys come in and they like your business, they're not
Yeah.
afraid to purchase your business. So the multiples really have not shrunk much. It's just some of the EBITDA and some of the profits have shrunk a little bit, and therefore the selling price have shrunk a little bit. Yeah.
What are the criteria in businesses that are seeing the multiples go up?
Yeah, fascinating, right? So with so much of this trend of these newer private equity groups that are coming in, they're looking for companies with 3 million, 4 million EBITDA, right? So because they can buy that and then they can have a kind of like a platform or a regional presence or a big presence in a certain market.
Hmm.
So those companies are having more options if you're the seller of those companies than ever before. Okay. And not just options to how many people you can sell to, but you can select your partner. You can make sure there's a cultural fit. You can make sure there's a personality fit. There's things you want to do post closing. You're not ready to retire. So there's so much because of these private equity groups coming from other industries, there's so much flexibility in how we put a deal together now that we did not have 3, 4 years ago,
Hmm.
right? 3, 4 years ago, we did deals, but they all kind of fit in a template.
Yeah.
You know? uh, uh, Now, we have these buyers that are more flexible than ever. So there's a lot of great options beyond just I can expose my business to a lot of private equity groups. Yeah.
Are there
I
any?
think that trend is great for sellers. It is great for people with 2 million, 3 million plus EBITDA companies
Mhm.
because there's a high demand for that at the moment. So I think 2026 will be a good year for owners in that kind of a bracket, so to speak, that are thinking about exiting. I think they're going to have a lot of great options.
So, what are your thoughts on, you're talking about that there are a lot of different options. And I know there are some players that have entered the space that are starting to do like, ooh, we'll buy 60% and leave you with 40% or
Sure.
things like that. What are your kind of your thoughts on that? I know that a lot of companies are getting approached with deals like that now as well.
Yeah. So you really have to do your due diligence
Hmm.
at that point,
Yeah.
right? So that is an all or nothing proposition. So it's either going to work out beautifully or it's going to end in a divorce. Like there's nothing
Yeah.
in between,
Yeah.
right? So that's when you really have to expose your business. You need to talk to a lot of different buyers and you need to make sure that you get to know them. You need to do due diligence, just like they're doing due diligence on you. You have to do due diligence on them, correct? And if
Yes.
there's a cultural fit and a personality fit, it'll work. Okay. But if it isn't, then it's kind of like marrying for money. The chances are it's going to go bad.
Yeah. Yes. There have been a few divorces as of late, not even like even just a couple like smaller companies trying to work together and sometimes it doesn't work and we divorce and we go our separate ways and that's not always possible, but sometimes
Yeah,
it is.
owning a part of the company is okay. Owning 20% or 30%, but I think like people that are listening to this podcast, I think like you have to sit back and strategically know what your risks are.
Yeah.
And you need to have a game plan so you're not reacting to what's in front of you.
Yeah.
You know what I mean? Owning a small piece of the business is the same as rollover equity, right? I mean that instrument has been around for a long time,
Hmm.
but it's an investment into the private equity group.
Yep.
Makes sense.
Yes.
And you want to make sure that that private equity group, you can't completely take the risk out of your investments, but you got to at least try to minimize it.
Hmm.
So you got to really sit before you even talk to any of these people. You got to really sit down and say, okay, what do I want to sleep at night? Okay, if I sell the business, what am I willing to risk? What are the chances of it going to zero?
Yeah.
What are the chances of it going to 5x? It's kind of like dating. Everyone talks like we're going to 5x it and we're going to 6x. There's a lot of sweet talking going on. So you really got to have the experience and the knowledge to kind of cut through a lot of the BS and really get down to, hey, what do I want for my family? What are the numbers? What are the metrics going to look like? What are their past performance going to look like? So you kind of have to get past all of the sweet talking. So, but if you can do that, and if you can find a good fit, it works. Otherwise, it doesn't.
Good reason to have a broker. A broker will know more than you
Oh,
and
I
know a
want
lot of the
shamelessly,
players.
promote RVA, but
I'll plug
you
it for
you
you.
want
That's
to
a good
you
reason.
want to talk to a lot of buyers.
Yeah.
Okay, I think as a seller, you know, and I've been saying this for years, and I'll continue to say it. I think talking to one buyer puts you in a terrible disadvantage as a seller.
Yeah.
Yes.
Yeah. Typically, if you're going to go buy something large, you're going to shop around and get multiple quotes or whatever. So
Correct.
it should be the same
Correct.
when you're
Yes.
selling your business. Do
Yes.
not just settle on the first one.
Yes, I can tell you, here's what will happen. At first, every seller thinks about money and multiples, and rightfully so. Nothing
Hmm.
wrong with it. But I can guarantee you, as you start talking to a particular party, the other side, the other buyer, quickly, your mind will start going more into what kind of character do they have? What
Yeah.
kind of uh, culture do they have? What are their plans, right? So it always starts with money and multiples and enterprise value and what are you going to pay me for my business. But I can tell you, once you get past that, very quickly, It gets into what are my culture, what's going to happen to my employees, how are you going to take care of my leadership team, how we're going to post close. So that's when you want to expose your company to a lot of different people because you want a variety of characters and different cultures that you want to talk to. So you as a seller can pick what is right for you and your employees and your team.
Hmm.
Yeah. Yeah.
Okay, so we also cannot do this podcast and update everybody on the state of things in M&A without talking about there's been a lot of layoffs, there's been some shifts
Yeah.
in the industry, and there are loans in default. And that just is something that is happening, and there's a lot of talk about it, but I don't think that there's any thought leaders maybe like you that are really publicly speaking to it. So what are you kind of seeing in that segment of the industry and the market?
Yeah. So loan defaults, both on the private equity side. I'll try to keep it general. I don't want to
Yeah.
call people on it,
Yep.
but
Yep.
but I can tell you, it's just data, right? It is loan
Yes.
defaults, across the board are high.
Yeah.
Okay, high in decades, highest it's been in decades. So what does it tell us? Is that maybe people bought things they shouldn't have or whatever, happened back in 2020. And I think in 2026, those loan defaults will continue. I don't think it's going to get any higher, but I think you are going to see those, going forward into 2026, and then it kind of washes out, I think. That's
Okay.
what's going to happen to all the loan defaults. Yeah.
Okay. Okay, so you're talking about washing out in 2026. So let's take your crystal ball out and tell us what you kind of, a lot of the stuff we're talking about today is stuff that you were talking about earlier this year at other podcasts that we've done even a year ago. So what do you think is going to happen in 2026? What are you seeing?
Yeah, I think if you're a private equity seller, you got EBITDA, your profits are 1.5 million, 2 million plus. I think you have more options than ever before. Not only in exposing yourself to different private equity groups, but in actually finding a fit beyond the money, culture, how they handle your team. I think you're going to have more flexibility in how we put deals together than ever before because a lot of these private equity groups are very flexible.
Hmm.
Hey, you want to work with them post closing? Great. You want to have this kind of a BD role? You don't want day to day operations? Great. So there's a lot more choices for you as a seller. I think that trend accelerates going into 2026. I think on the small business side, which is 5 million and under, I think you're going to see an acceleration of buyers coming in. I think it's going to be a seller's market throughout. Okay. Our uptick is already happening in Q4. We think our Q1 next year looks really strong, probably the strongest Q1 in about 3 to 4 years. I think that trend continues going into next year, unless there's an event, some kind of black swan event that we haven't seen or can't predict yet. But all things being equal, I think we're going to get there.
I kind of hope there's no black swan event. That had my
I
mind
know.
on
Well,
COVID
not in our
and
industry. I
other
think
things.
claim
I'm like,
volumes come up, but I've
okay,
been through a lot of cycles of down claim
yeah,
volumes. When we're down, we think it's never going to go up. And then
of
when it's up, we think it's never going to go down. And the fact is, over the years, it's all going to average out to,
yep,
maybe we're below the average now. We'll get back up there.
yeah.
Doesn't concern me one bit.
No, that's exactly right. Okay, I have one kind of maybe one or two final questions here. So we're talking about when you and I were first talking about the big M&A push a couple of years ago, a lot of the people exiting at that point were burned out from COVID. They were older owners that were getting ready to retire, those kind of things.
Yep.
This is a different level of owner now. Things have shifted in the industry. So who are the sellers today? Who are the people looking to sell and kind of looking at these PE companies coming in? Who are they looking at?
Okay, so there's two very distant buckets. Okay, so you still have a lot of our owners that are retiring.
Hmm.
They're within 5 years of retirement, and they're selling, and they're getting more strategic. Okay,
Yep.
which is fantastic for them because it gets much better results for them and their families, right?
Yeah.
So retirement is still like the number one reason to do it, but you also got a lot of sellers now that are getting smarter, and they're saying, hey, whatever, I got a $20 million company. Uh, and I want to get to 40 million, 100 million, that they can do it faster with a private equity partner, right? So that bucket of sellers is growing quite a lot. And it makes a lot of sense. If you can find the right partner, you can accelerate your business much faster than you can do it alone, right? So
Yes.
you get a lot of owners in their 40s and 50s now are saying, hey, I'd like to double, triple cash out, increase the you know my outcomes when I get ready to retire. and I can grow it little by little by little, and own 100% of it, of my company, or I can sell 70% or 80% or roll over some kind of investment back into the private equity group, and I could accelerate that growth a lot faster. I think that set of owners is new, and
Hmm.
that's starting to grow quite a lot in our industry. And I think you're going to see a lot of that going forward.
Yeah, I agree. That is one of the things that we've even been seeing the end of this year, more announcements here and there about so and so's been backed by this or this or this or
You're going to
partnering
see a
or
lot more of that. Yeah.
yeah.
And in the right instance, it does make a lot of sense to do it. Yeah.
Okay. All right, perfect. Anything else you want to touch on before we wrap it up? This is our
No,
last
I
one
know
of this year,
that
but
was a lot we packed in there.
it was, but it was good. This had a lot of meat to it, and I think people are kind of hungry for this kind of information right now, the way things are, because there has been some uncertainty. But I think everybody can kind of feel that 2026 is going to be different. So I appreciate all of your
Yeah,
knowledge.
sentiment was down in 25 in our industry across the board. There's no, it is what it is, but nothing concerning. I mean, it's just a little downturn year. We come right back up.
So,
Q4 has been hot, a lot of action going on in our industry in Q4.
hmm,
I think that's just a sign of what to come in 2026. I think we'll be back up to normal levels for us.
yeah, I think so too. I guess we'll see. All right. Well, thank you so much, Gokul, for all the insight. And for people who are listening, you can find all the Main Street Restorer episodes on CNR's YouTube and on CNR's website. We share lots of it on social media as well. And more will be coming back in 2026. So stay tuned for more updates with Gokul. Thanks,
All
Gokul.
right. Thanks, Michelle.